Obstacles are placed in our way to see if what we want is really worth fighting for. I love that anonymous quote. My friends, 10 to 15 minutes each and every day fighting those obstacles until you overcome them. Learning by doing, on-the-job training. You can do this. You just have to stick with it. Have faith and keep moving forward through thick and thin. And we are slowly coming out of the doldrums of the summertime trading zone. We're not there, but selling may and go away, live to trade another day is not a market saying because it's untrue. It is a market saying because it is true so much of the time now. In the middle of COVID, summer was weird. I mean, we just traded through it like normal. This summer, getting back to normal as everything else seems to be, with, of course, rampant inflation, war in Europe, more bills and government legislation being passed that may just continue to water down the money supply. That's called inflation. It's like blowing a balloon up with air. As you print more money, as you print more and spend more from the government backed by nothing, it tends to cause things that are worth stuff to become worth more in dollars, but not necessarily in value. Just means the dollar becomes worth less as you print more of it. So we'll see how the stock market continues to move. And what's it done today? Boom, up again. Let's check out the S&P 500. Wow, our trade closed successfully in the morning. Isn't that beautiful? Up 2.32% in just a matter of 1, 2, 3.5 days following that crossover going up after we blew through the 200 EMA. And of course, we're at a positive 15. The 2-day is green on the STC, candles too. And what about the weekly? It's green also. Things are looking nice. So that's where we are on the S&P 500. We look at the Nasdaq 100. That move started a little bit later, I believe. Yeah, it did. It started in the afternoon. S&P's move started in the morning. But we jumped in there. Things popped up, then moved down a little bit, then popped up again. Up for the day, but not cashing us out yet. At an up 3.47% and out. Haven't hit that yet, but we were up 0.81% for the day. We're getting closer. Keep your eye on things if the market does start to pull back and turn over on us. But so far, so good. Things are moving up. And of course, we're at a positive 15. 2-day is green on the STC and candles. Of course, they blew through that 200 EMA there on the 2-day chart, and of course, like the S&P, bounced off the 200 EMA on the weekly chart, and several weeks of green up movement. Looking nice. Good to see that. Gives us something to jump in the market and trade. Now, let's move on to 20-year bonds. Where are they? Down a little bit for the day, 0.09%. Below the 200 EMA, negative on the half day. Now we look at the 2-day. It is green on the STC, but of course, red down candle, we really dropped down low on that wick last week. We've not reached that yet on Monday. Still green on the STC. Like I said, still green on the STC also on the weekly. Now, the one thing to note on the weekly and the 2-day is I pull things down. Look how far we have to go down till we get to what? The 200 EMA. We are well below that, and that's just the weekly chart. Also well below the 200 EMA on the 2-day chart. I can bring that in a little tighter for you. Boy, I have to really tight. There it is. So again, well below the 200 EMA there. So what are we waiting for? Well, we've not had a good jumping in point when things crossed over on the STC. Went down for a day, then popped up for, went down for, a day, popped up for a day and a half, down for a day, popped up for 2 days, and then down for 2.5 days, sideways popping. So nothing for us to really jump in and hold on to. So we'll wait till bonds straighten themselves out and give us a clear signal to be able to jump in in the right direction. Since we're below the 200 EMA, then of course it would be a down move on this short chart. So that is where we are on bonds. Let's move on to gold. Gold, our biggest downer for the day, 1.29% when we look at gold. And look what we did. We jumped in about 12.15 and we went ahead and set our loss at a stop of $1.31. Where did that come from? Well, if you look over to the left side of the screen right here, and if you look at that red figure, when I track over here and line it up, you see it goes to 131. That's what the average true range was. That's a 14-day average true range. That's how much the price ranged on average over 14 days. That's how we set our loss band, at one average true range. Since we're doing a 2-to-1 profit to risk ratio, then how do we do that? Well, we double it, which means we're looking to gain 1.58%. Sorry, we're hoping to make $2.62. We're risking $1.31. So that's a 0.79% loss and a 1.31% gain. Now, what are we keeping in mind with this? And I have questions from you guys all the time. Tom, I'm not feeling really good about gold and going down, and what would I be looking to do on this? Why? Well, you look at the 2-day and it's green. It's been going up. It's below the 200, but the STC is green, has been green for a while. Yes, I'm showing some red now, but I don't know how good I feel about that. Look at the weekly. The weekly has been showing some up movement. Now, it's red on the STC, but I'm still a little iffy on everything. My friends, you don't have to set a 2-to-1 risk to reward ratio. You could reduce that down to a 1-to-1. Again, it does mean that when you start doing your figurings on losses and you start looking at our always winning formula, it adjusts things for you there. But if you cut your losses faster, again, not saying this is any kind of guaranteed win here. We've got a little bit of some potential issues. That 2-day chart's not really going with us. The weekly is, but it has some up movement on the candles. We like to see things, of course, at a negative 15 for down trades, a positive 15 for up trades. You don't always have that. So what can you do to obviate that? Well, you can, of course, look at what you're risking and use that to reduce, and we've got a great training on that, reduce your risk based upon the volatility. That is something you can do, and you do that by reducing the size of your trade. In addition to that, you can always, of course, adjust how much profit you are looking for, and you can adjust how much losses you're willing to take. Now, the reason we use the average true range is because we don't want to get called out of these things early. That's why I like using the average true range. I like the 2-to-1 risk to reward ratio, because in the end, you only have to win 4 out of 10 times if you're employing that kind of measurement, that kind of goal setting. And of course, that always winning formula explains that to you. You know what I'm going to do? I'm going to put that at the end of today's video. That'll be an additional training video in addition to the video that we have in your show notes. If you're not a subscriber, you need to be one, because we've got a great training how to use, or maybe not use, the news when figuring out how you want to trade. So keep that in mind with this gold trade. We're jumping into it as a practice trade only because things rotated over. We'll see how it works. If it doesn't work for us quickly, then of course we may cut that trade off quickly, but we'll keep a close eye on it. And again, I encourage you to do all these practice trades that you possibly can. And how do you make them the most worthwhile? Well, you fill out a trade worksheet. You keep running notes. You pay attention to what you see happening and to what you are learning. And each stock, each ETF is its own individual little player. None of them work the same. They're all a little different. So keep your eye on the prize. The trick is to have a successful trade. The trick is to learn everything you can from every practice trade you do. Lastly, we'll go to Bitcoin, down for the day 0.91%. Now, this is the Vanek Bitcoin Trust. This is a short-term future trust ETF. And what do we see going on here? Well, if you tighten this up a little bit, you can see we're still below the 200 EMA. Where are things? Well, they popped up back on the morning of the 11th, and then, of course, sort of sliding sideways down some for the day. Again, waiting for Bitcoin to see if it's going to continue to recover. Did pop up to a more recent high, but it's back down below that, just about where it had popped up a few times before. So again, we're continuing to keep our eye on things. Where are we on the weekly? Again, we have some up movement, but not reaching that high of last week yet. So we'll continue to watch, keep an eye on things, see where Bitcoin takes us, where it leads us. We're still negative on the STC on that weekly chart. We are positive on the STC on the 2-day chart. And of course, again, not holding a lot to this positive on the half-day chart. Why? Because of all this sideways sliding. You see where things went to red and then popped back up. We're looking for a really good and decent reset. Folks, that's where we are as we end the day on Monday. Another exciting trading week before us. We'll be with you each and every day. Thank you so much for your support, particularly our Patreon supporters. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.